All right, everybody, Mr. Macke, welcome to Mackey's Retail Roundup Live. I'm Spencer Israel. That's Jeff Macke. You're in a good mood today, Jeff, because people are buying and the stocks and they're going up and it's great and the tariffs are going away apparently.
Well, you give people long enough, Spencer, and they eventually come around to the correct idea, the correct way of thinking, which of course is kind of, I try to lead the way there, and that's our job. Now, anyway, we're having a great rally. It's been incredible, obviously, since Monday, and this is what we've been begging for. Like giving flashback to kind of the lost April that turns out to be
Yes.
just a ridiculously trading volatile. There were so many ways to lose money in April that, honest to God, it's I feel terrible for not making more money, but you could have blown yourself up 1,000 rational ways. And all we really wanted was a 90-day pause. Like that was not our top 30, like a real tangible, just instead of just going bonkers in the Rose Garden on just a random Tuesday or Wednesday, whatever. Why don't we just kind of think about it a little bit, let people kind of adjust their supply chains, ease into it. No sense causing a recession. We didn't get one until Sunday. Not positive, we have one now, but the companies are kind of good enough to go. And honestly, all that does, it releases a lot of forces. Now, there's a lot of this rally that's just, we've talked about it for a couple of weeks now, right? The market smelled this out. They smelled a non-worst case scenario out. We've talked about it a lot, and that's really where we are. Let's not pretend like we're all giddy. We're flat for the year, and flat the hard way. Like we've aged like dogs, and and we're flat. This is a tough way to not make money, but it's better than just absolutely suicidally horrible, and that's enough to catalyze a rally. Because honestly, pretty much everyone involved was doing a good job of convincing us that you had to price in the worst case scenario. There's a lot of pent up money. This 90-day pause is getting the supply chains moving. What that eliminates, we can talk about it more. But I mean, let's just say it's good. Let's just say it's good. And if we flash forward, Christmas is saved. And so you put this into place. We didn't really have the 90-day pause before. Now it's a month later. You can see Santa Mackey's all giddy. Spencer, here's a clue for you. If I'm breaking out the Santa hat, it means I'm in a good mood. It means that things
All
are
right,
kind of
good to
happy.
know. Duly noted.
It's subtle. I'm not really. I'm a nuanced kind of guy, but yeah, if I'm a bald man wearing a Santa cap, it means I'm happy. And what it just the 90 days means that companies can adjust. What the problem was before is that it was just sort of, there was this capricious kind of unfair aspect to it, where when you just came down with these draconian tariffs, it was an embargo. In China, that was an embargo. It's by any other name. Once you go over 100% for tariffs, that means there's no goods going back and forth. In simpler, less fancy terms, I mean, it just means you freeze trading. No one can afford to do that, and so the supply chain froze. Even with the 90 days, even with the increases, companies can say, you know what, we're going to take a margin hit. That normally would be bad for the market. But in the case of, if you've been spending the last 3 weeks pricing in worst case scenarios, 10% sounds okay. At least this way you have Christmas. You don't have the empty shelves. You don't have the entire supply chain getting laid off. Those were kind of the optics that the administration, any administration, even one that DGAF is honestly tattooed on everyone's ass. They might have a brand where it's just like, do not give and if you don't just kind of accept that as the doctrine, you're not going to be part of this. But even in that type of environment in DC, they don't want to see empty shelves, and they didn't want to see the docks empty, because that's just kind of, self-inflicted abuse. And we've avoided that with the 90 days. And that's why the mall's rallying, because this was really kind of a death sentence for a lot of different companies, and it's not anymore.
Well, I'm pretty sure we said a month ago, Jeff, that yeah, retail is at the center of the storm, and if and when the storm ever calms down, then retail is going to be the leader, right? What led down should lead back up too. So that's kind of what's happening here. So this checklist though, shouldn't all three of these kind of be checked off in a way? That's kind of what just happened.
You know what though? I need the big daddy. They like the 90-day pause. It's in kind of the graphical artistic form, as opposed to the long written word that no one has time for. there's a lot unsaid there. We needed it from China. We didn't need a 90-day pause in the rest of the world. And so that's the big Megillah. In terms of a plausible strategy, I don't know. Could stuff change in 90 days? Oh my God. Have we learned anything? Like honestly, if we're surprised over things getting a little bonkers in the next 80 days, maybe we haven't been paying attention. But the upshot of this, and thanks to ChatGPT, who I taught to draw as well as me, it took an hour and it was super depressing, and I'm having an existential problem. But that's kind of a kick-ass graphic. There's me just riding roughshod in a bullish type manner. We're 22% off the lows on the XRT because it's, whatever the situation is, it's better than half the retailers on earth dying, which was entirely in play for a lot of these companies. Nobody could order inventory. It didn't really matter how your supply chain was situated. And so that was, it was always sort of a long shot, but you had to price it in when the president said he wasn't going to budge. Now that he budged, mission paused. Good enough, we'll take it.
Okay, so summarize all this for us. The reason that retail is responding, I mean, the whole market is up, obviously, right? But the reason that retail specifically is responding the way it is because these new tariffs, or I guess lack thereof, the smaller tariffs, are basically are a signal, and you can correct me if I'm wrong, are a signal to the CEOs. It'll be okay. You can keep buying goods for the holiday season and beyond, and don't worry about it, and they won't bankrupt you, and you'll have stuff to sell. Is that the bottom line?
Here's a window. Yeah, you'll have stuff to sell. They spent from April 2nd until Sunday night just basically wondering how you're going to stay in stock and what you're going to choose. Okay, we only have so many inventory dollars. Yep. We don't know where we're going to spend them. Half that stuff comes from China. We can't afford that. So you're really making a lot of decisions that are kind of split the baby type of painful Sophie's choice type of business. Now you can at least buy some inventory. And are you going to take a margin hit on it? Sure you are. But from an investing perspective and also from a just running your business perspective, yes, that's much worse for illiquid companies, but it's much better than the situation we had before where everyone was out of business. So now you have shelves that work. People will be able to get product. Is it going to cost more? Sure. But again, the mall is saved is not entirely inaccurate.
And also you kind of said it, the more liquid companies, aka the larger companies, are going to be okay. The smaller ones, especially like small businesses, they're still in trouble here. But we're talking about the large billion-dollar corporations, and the ones with the most liquidity are going to be able to withstand this. This is the chart showing, basically a whole bunch of mall retailers. We got the Gap, we got On Holdings, we got Lulu, Abercrombie, and Victoria's Secret, which have all ripped off of really in the last few days here.
And let me tell you what they have in common, Spencer, because particularly the Gap. I mean, it's been a favorite of mine, and I've gone back and forth like Hamlet for the last 30 years of my life. We won't even have to get into that. But in terms of what this pause does for them, it kind of makes all the difference in terms of their ability to order inventory. They're a good retailer. They've spent the last 5 years diversifying their supply chain. And really, if they've accomplished anything under a stream of kind of mediocre CEOs until the new guy got there, is they short up the supply chain. And so they shouldn't have been taken out of business by what was going on with tariffs. They were. Gap's a great example of a company that they did all the right stuff. They diversified, they weren't too leaning on China too hard. They had Indonesian exposure, they had Vietnamese exposure, but all those tariffs went up so high that it really sort of froze what they were going to do. Now they're back in business. And now you're back to the turnaround story that we liked before when the stock was 26, before we started all this garbage about the self-inflicted tariffs. Only and even better from an investing perspective, if Gap warns when they report in a couple of weeks, I don't give a crap. You know why? Because it's a super good excuse. Oh, yeah, we froze the entire supply chain for a month and a half for absolutely zero reason, and that's going to affect the second quarter. We're not sure how the second quarter earnings are going to come in because we had to airship stuff by like carrier pigeon over the course of the Pacific Ocean, and that cost a lot more than just using cargo containers. Like, that's a good excuse. And so you have these kind of misproof companies set up where if you're going to be liquid, if they're not going out of business, then whatever margin hit they take, I don't care. That like like On Holdings, worst name in the entire English language, by the way, is On. But they're incrementally improved. We bought it yesterday because it hadn't ripped already based on the news. And at this point, they're just in a better situation than other companies right now. And they are a much better situation than the one when things were froze 3 days ago. And so these moves are kind of rational. And you have people underinvested in the space. The chase is on.
This is the thing about bad news is everything seems good compared to the worst case scenario. So the worst case scenario kind of happened like a month ago, right? With Liberation Day and everything that Jeff is saying. Anything is better than that. So even in the grand scheme of things, I think Jeff, even you would agree, all these companies are in an objectively worse place now than they were at the start of the year, but they're in a way better place than they were 4 weeks ago, and that's what matters, right? So, so everything is good compared to 4 weeks ago.
Listen, we launched March 20th is the date that I started investing this portfolio. It was epically terrible timing. We went straight from there like into the tariff zone, and we are so much better off than we were then. Now, compared to the beginning of the year, not great. But you're seeing the response also in names that aren't necessarily imperiled, but just need a little something going their way. I love the price action in Starbucks. We talked about it. I think we called people pejorative names when you and I were on the show for selling off on Amazon and Starbucks after the hours, saying that they were being sissies. It was time to step up and buy stocks. It's nice to have a little, tailwind of random, capricious executive decisions on our back. But at the same time, these stocks were already kind of finding reasons to buy. It's even though they turned in not great quarters. The first reaction for Starbucks was to sell it 2 weeks ago. They would have kept selling it and it would be $50 a share right now. It was already finding a bottom. And that's not even getting into stuff like Uber, which saw incredible price action. I tweeted after they reported, I said, I already have FOMO over the rally back over 90 that Uber is about to stage once people get done selling it. That happened. It's true. I have deep regrets over not owning more of that stock, but here we are. The reaction to the blue chips is good. We're just in a better environment than terrible.
Yeah. This one, we talked about this last week, Jeff. Topgolf. You have a lot of thoughts on the company and what they should do. But what is it?
I want to like it so much.
Down.
The reason I included it here is because not everyone's saved. And what kind of, if you're going to quibble about the last month and sort of the disaster that's kind of unfolded for it, Topgolf's a pretty good example. All they're trying to do is spin off the Topgolf driving range and booze operations from a really nice, dependable golf club business. It's Callaway. They should be Callaway. It should probably be a private company just hanging out in Carlsbad, getting high, hitting golf balls with Phil Mickelson. That's what they should be doing and making like $75 million a year. Instead, they went public. They paid $2 billion for Topgolf. They were reporting last night. It was up 10% after hours. It looked incredible because things aren't so bad and it looks great. And then they started talking about the actual Topgolf sales. And it turns out that when you just put a death chokehold on the entire economy for no reason at all, your corporate outings at places like Topgolf fall off immediately and super dramatically, and everything marginal. And man, a Topgolf experience is super marginal. Like that just goes in the waste bin right away. That is the first dollar you get rid of. We can still afford Doritos, but we're not going to freaking Topgolf. I'll tell you that right now. It's the first thing that goes, and it went. And so Topgolf, they were doing great. About halfway through that call, they said, and by the way, as we spin off Topgolf, we've gone from asking for $2.5 billion for the split off to maybe we'll just throw it in with like a 3-iron. I mean, they're not going to get a ton of money for their driving range dispenser, and they don't deserve to. I want to buy them so much. I'm totally bullish on golf. I honestly, I like the company makes Titleist is just this weird conglomerate. I want to be long a stripped down version of just Callaway Golf. Like I want to own them. I want to chill with them. Let's go get in and out, and me and Phil hit golf balls. That'll be amazing, but that can't happen. And would this have been as much of a disaster for Callaway had we not frozen the supply chain for a couple months? I'm not sure, but not everybody gets saved by this 11th hour reprieve, and yeah, this is a company that's going away. You can think of Skechers. Skechers sold out because basically the CEO didn't want to deal with another 5 years of garbage. If that happened last week, by Monday, I'm pretty sure he was regretting that decision.
All right. This is Walmart. We'll talk more, Jeff. I think you and I should do a stream tomorrow specifically to talk more about Walmart and their earnings report, which is Thursday, right?
Right. You're
Um,
just here as the bar goes. I have two reasons to listen to Walmart. One is it's a one-stop economic report. We'll get into the details of that later. Two is it's absurdly expensive for a company that has like 3% net margins on the complete discount garbage that they sell. So, they're kind of trying to dress themselves up as a little bit of an AI company, a little bit of a tech savvy startup.
right.
It's the Daytona 500, man. We start the NASCAR season right here, right now with Walmart. That's Thursday, and then we kind of get going into Target.
Yeah.
It's we get into the rest of the stores.
All right. I think so. Jeff and I are going to do an earnings specific stream tomorrow, and I think we'll do one each of the next few Wednesdays as well to just talk about these earnings reports because really Wednesday, Thursday is the big earnings reporting day. So we'll look ahead to what is coming. We'll talk about what already reported for the week. We'll do that tomorrow. There's a couple questions in the chat. First off, Rachel still likes her doodles more than ChatGPT. Jeff, you should know
Oh,
that.
thank you.
Philip wanted to know if you had any updated thoughts on Kohls regarding their financing. We talked about Kohls a couple weeks back. I didn't realize that there was something going on there.
Flaming dumpster fire of misery. They're if you like wonky reporting, and who doesn't, the Kohls 8K, there is news released over the weekend where one of the directors who left Kohls wanted to make sure that everyone realized that it was a contentious exit, that she left specifically because she thought the board of directors was pretty much irresponsible. And as she put it, we all get sued together, and I want to make sure I'm not in with you guys. I'm
Nice.
paraphrasing, but not as much as you might think. It continues to be a company that is just swirling the toilet. I don't know in terms of they just offered, they're on the debt market right now. And we'll see how far this rally has to go, because that's another good example of a company that doesn't have a lot going for it. This crisis made things almost impossible for them. They had to raise money without being able to buy inventory, which for retailers is impossible. Now they can buy inventory. Maybe they're in the middle of a CEO switch, board disruptions. They're the Green Bay Packers of retail. There's some corruption going on there, Spencer. They're still overrated.
Oh,
People still are big fans. I'm not trying to throw shots in the NFC, but I'm just saying. If you're going to make a comparison, you would say that these guys are the pride of Wisconsin and something shady. So we'll see how Kohls is doing on their financing. But there's a few different canaries. We talked about Callaway being one of them. Talked about Skechers. Talked about Kohls. We're going to see with Target. This reprieve doesn't save everyone. And if you're long a few of these super Bowsers, these companies that we've talked about, the barbell approach. I like the super good companies and the ones that are kind of being priced to go out of business. Anything in the middle, I'm not sure they get saved. I'm not sure Target gets saved. I'm not sure Kohls gets a loan, and so be cautious out there, but stick with what's winning.
There was also a question in the chat about options trades. Yes, Jeff does put on options trades. He puts them out, actually. They are for members of the Retail Roundup Plus community. I just dropped the link in the chat. He put another one out. I think the most recent trade was Friday. I think he does about one or two a week. So the portfolio is for anyone who's in Mackey's Retail Roundup can see that and his trades, but then the options trades are for the Retail Roundup Plus group. So I just dropped the link in there. Last one, and then we'll hop out. Jackson wants to know, where would you look to add Amazon?
Around 200, around the Bezos selling level, around the legendary. Let it pull back, let it chill a little bit. Super benefit for them out of this deal. But as we've talked about before, Amazon is almost like a hedge at this point. It's not the company you want to own in sort of this gun and run environment. I would much rather own like a Starbucks, in a cheap funding, better economy environment, they recover much faster than people think. Amazon, on the other hand, they win in a disaster, like even more so. And so, honestly, the more the retail environment improves, you could argue that that's less good for Amazon than it would be. But I
All
think
right.
you can kind of, you need to be long.
You heard it here first. You'd rather own Starbucks than Amazon. You don't know how many other people can
I'll
say that.
stand behind that.
Great. I love it. I love it. All right. We'll be back tomorrow. I think we'll do this around the same time or maybe around the close. I'm not quite sure yet, or I don't have my calendar up in front of me. But we'll definitely do an earnings stream tomorrow. So Jeff will see you there. Everyone will tune in tomorrow afternoon to see us, see Jeff preview these earnings reports for this week and we'll look ahead to what is to come. We'll talk a lot more about Walmart and what to expect from that. So Jeff, we'll see you tomorrow. Everyone, thanks for watching and keep buying, I guess. I don't know what to say, right?
Right on. Let's go for a jog in our fancy on cloud shoes. We'll hit some golf balls. It'll be fun.
It'll be good. See you guys.